Some people are right now reinventing finance and making new propositions, and we're going to get an overview of some exciting startups in different domains. This is the first time at Lyft we have a speaker who's on clutches, so he's really brave to come on stage. He tried to ski in Switzerland while not being Swiss. And it's a French guy making the joke on you. He hurt his knee. He's very courageous. I think we're going to bring a chair, which is here, so in case you can sit. He's been working with the finance industry and the markets for many years, a veteran of that industry. And in 2005, he decided to start his own fund to explore all the exciting world of financial startups. Please help me welcome to the stage Sean Park.
Thank you, Laurent. So I'm glad Laurent told you I hurt my knee skiing. I want to put your mind at rest. It wasn't the goons of the financial establishment that kneecapped me and tried to prevent me from doing this speech. And I also like to apologize if it looked like I slept in my clothes. It's because I did. I just got here, but I couldn't give up the chance to speak about something I'm very passionate about, which is the reformation of finance. And I'm going to talk about it in two parts. 20 minutes is very long, so it will be very high level. If you're interested, there's lots more on my blog, Park Paradigm. But in two parts, I'm going to tell you a little bit about myself and a little bit about the history, and I think that context is important. And I'm going to finish by doing a very, very sort of high-level, sweeping survey of a few of the really, really interesting companies that are emerging that are reinventing finance, and maybe hopefully drill down a little bit deeper on one or two of them. The idea is to give you a flavor that this is happening now. So my background before I did this, before founding Anthemis Group, so I'll just tell you very briefly, Anthemis Group, we're a startup. We're a startup that invests in startups. And like all good startups, we have a very, very big ambition. You could call it a hubristic ambition, which is to build the world's leading financial services group over the next 10 to 20, 30 years, from the ground up, reinventing finance. And I came to that after 16 years in investment banking, mainly in capital markets. I was very, very fortunate. Serendipity. I arrived in the industry at a great time when technology was just starting to kick in. I arrived at the industry in 1990, and it might sound silly now, but spreadsheets were a technology. Bloomberg terminals. It wasn't until 1995, 96 that the web started to become ubiquitous. And I saw that transforming the industry. It was getting bigger, faster, stronger, more productive. It was all good. And then around the turn of the century, there started to be diminishing returns. And at the same time, I started to realize that technology was proceeding at such a pace that you could fundamentally transform business models. Start again, blank sheet of paper, how would we do this? And the fundamental business models in finance, most of them across the board, insurance, retail banking, payment, they're sometimes hundreds of years old, or certainly 100, 200 years old. And they've just been improved by technology in a linear fashion. Now, my colleagues and peers, they weren't super enthusiastic about this, so eventually I decided to set out, leave the mainstream industry behind, but try to bridge the existing world and support innovation. So very quickly, if you haven't ever had a chance to read this and you're interested in macroeconomics and the economic history, I highly recommend it. Carlota Perez, Technological Revolutions in Financial Capital. It sets the scene. She builds on Schumpeter, and her thesis was about every 50, 60 years is a major technological revolution that just changes the paradigm. And what happens, it's a little bit like the Gartner hype cycle. Society struggles to catch up. And just as it's catching up and there's sort of a golden age where society and technology is aligned, everybody's figured it out, a new one comes along. And this repeats. And our economy today is really built on the 20th century paradigm of the age of mass production, the rise of a big corporation. Alfred Sloan, who was the chairman, president of GM, built the sort of the apogee of the industrial corporation. In 1937, economist Ronald Coase wrote a paper called The Theory of the Firm, which tried to understand why do corporations exist, shortening it enormously. His conclusion was it was to minimize transaction costs, and thus you got the big hierarchical large corporations that we see today. But then around the time, a little bit before, a little bit after, many of us in this room, I think, were born, Intel invented the 4004 CPU on a microchip and ushered in the age of information. I think there's, that is what we've lived through the last 30 years, and it's the end of the industrial economy. In 2006, I've just picked this out as an example. It's not this, there isn't this moment, but this is a good, I think when we look back, will be a good talisman for the age of networks. In 2006, Amazon announced on a blog post AWS, and everything that goes around that is creating this new paradigm at a very macro level, the information economy. This has happened. You had 250 years of the industrial economy. All of our institutions are optimized for that. We had 200 years how to learn, was education, politics, our corporations, our economies. And our thesis is we're at the beginning of a completely new paradigm, and this is one of the reasons why there's enormous disruption in the world economically. People can't adapt. This is something we think that's changing the way that corporations are optimized to more horizontal disaggregation. We use the stack metaphor from IT. So again, the paradigm or the paragon of the old company was this vertically integrated. And if you think of financial services, the bank that did everything from A to Z. We think going forward, that's going to start to break apart and people will specialize in different areas. Some of the big trends we see are big data, consumerization, gamification. These are common across a lot of industries, but finance is a little bit late to the game sometimes for, I think, reasons people understand. And these trends are now starting to seep into the financial world. Everything as a service, banking as a service, wealth management as a service, payments as a service, risk management as a service. These kind of trends that we've seen disrupt other industries are now coming into finance. And we have a thesis as to why finance was late to the game. It's not a very insightful thesis. It's not low-hanging fruit. It's a tough industry, high barriers to entry, very profitable, very entrenched incumbents, and a lot of regulation. Doesn't mean it's impossible, but the most sort of ambitious entrepreneurs are usually quite smart, and they go for the lowest hanging fruit first. Now, as we go into 2010, 2011, 2012, we're starting to see a Cambrian explosion of new ventures, new companies, entrepreneurs focusing on this space. And the fruit may be high up in the tree, but it's enormously big and juicy. So I've broken up, again, this will be very high level. I broke it, and it's not exhaustive. The interesting thing, when I left banking in 2006 and started to really focus on startups and new ideas, new business models, and financial services, and that was my focus, and it had been, and I sort of was doing it part-time as a passion, and then it became full-time. I don't think it's much of a stretch to say that I could probably name all of the startups, at least in the Western world, in North America and Europe and the UK, in financial services. I couldn't count them on one hand, but I could put them in a very small spreadsheet, and I knew who they were and what they were doing. And that curve has been slowly growing exponentially, and as I said, just in the last year, maybe 2 years, but again, on an exponential curve, we're just seeing an explosion in startups. More in different sectors than others of finance, but generally in finance. And for us, that's very, very exciting. We position ourselves to help, we invest human and financial capital and hope to catalyze this, and maybe in a small way, we've been part of that acceleration. One of the One of the areas where there has been most of the, much activity is in personal finance. I think many of you might be familiar with Mint, which had a lot of press, which was one of the sort of the first very successful personal financial management tool. But there's literally hundreds of companies in this space now, and I'm not going to talk about all of these. I don't have time. But if you look at a company like Fidor Bank, which is based in Germany, and hopefully soon will be offering a service first in German-speaking Switzerland, and then very soon after across Switzerland, and then later in Europe. They're regulated by the Bundesbank, so they have a European passport banking license. This is a digitally native bank. It's completely online, but it's not just online banking. Everything in their DNA is social and uses all the tools that we have today. That changes the banking experience. You can have your account. We talked to David and Adrian talked about virtual currencies or multiple currencies. We also agree that we're going to a world where there's hundreds, thousands, millions of currencies, and it won't matter because you can translate between them instantaneously at very, very, and probably ultimately almost no cost. Fidor Bank, you can have an account in up to, eventually up to 140 currencies. They don't have demand for that. 20 currencies, you can switch in and out all day long if you want. It doesn't cost you very much. You can also switch into virtual currencies, into gold, platinum, silver, all with a click of a mouse. So if you're in Germany, open an account. It's a fantastic bank. Sorry, as a disclaimer, we are investors in some of these companies. We are an investor in Fidor Bank. We're not an investor in all of them. We maybe would like to be, but we're going as fast as we can. Zopa, peer-to-peer lending, they've been around for a while. It's starting really to take off post the financial crisis. You're seeing the inertia start to disappear. Wonga uses big data analytics, and I think now, the last I heard, 95 different data sources to do algorithmic real-time credit scoring to offer short-term loans. Something that banks should be able to do, but they haven't, and it's very, very powerful. I want to talk to you about Simple. It used to be called Bank Simple. You may have heard of it. They're in the US. The two founders decided 3 years ago, I've known them for many years, they decided that they needed to build a bank that didn't suck. That was their first tagline. They actually raised angel money with that tagline. It's a meta bank, but it's two things, which I think will be a theme that comes through. It's very, very high tech, using tech to enable interesting services and products, and very design-focused. And it's a bit of a cliche, but a lot of the companies that I'll show you here, and sort of as a shorthand, if I have to describe our investment thesis in one sentence, is we try to invest in the apples of finance. Partly because we want to invest in companies that will become worth $500 billion, but also because the genius of Apple is taking all the innate complexity of the services that they provide and hiding it away. It doesn't disappear. The complexity is there, but hiding it away and creating a beautiful user experience, an intuitive user experience. And this is just the opposite of what finance has always done, which is certainly not hide the complexity, but probably revel in it. And if there wasn't enough, maybe just add a little bit more, just in case that you might not be confused. And then once you're well and truly confused, like the cardinals of the pre-Reformation, the financial Latin mass, they would be only too happy to translate that for you and manage it for you for a small donation. But most of finance, the ends isn't necessarily that complicated. The means of getting there can be quite complex. There's no hiding that. But these new companies that are emerging are embracing this idea of they'll use technology and their brain powers to help hide that complexity away and provide their customers, whether they're business people or individuals, with the services they need, the actual end services. I need to save for my retirement. I need to pay for things. The basic services. So we even try to abstract all the nomenclature out to really purely think about what are people trying to achieve. So Bank Simple, very, very beautiful user interface, and they invented something that seems, they invented it. They rediscovered or surfaced something that I think for everybody in the world is obvious. Do you care what your bank balance is? Well, no, not really. You use it as a proxy for the thing you really care about, which is how much money do I have to spend? And US banks, this is particularly acute in the US. There's differences in countries, but in the US, the retail banks earn about $40 billion a year in charges. Most of those are overdraft charges. And you think, oh my God, Americans, like, can't they figure it out? Like, just make sure you don't go overdrawn. It's not that easy. Banks, they play around with settlement dates. So you might log into your account. I won't pick a bank, but any bank, and it'll say you have $300 on your account. But actually, your rent went out today, and the check that is already appearing in your balance doesn't clear for 2 days. So you're actually overdrawn by $100 for a day you don't even see it. And they can charge you $40 for that. Thank you. So bank simple, safe to spend. Not only do they get rid of all that sort of garbage, but they also use algorithms to look at your history, learn about you. And to be quite frank, at the very sort of the first 80% rule, it's quite easy. You have this much in rent, utilities, you spend this much on groceries, they look in your account, and they can tell when that happens during the month. So anytime during the month, or you can set the time period, they can tell you how much is really left. How much is, mad money in your account. So that's bank simple. In markets and trading, a lot is happening. And interestingly enough, most of the really good stuff is happening in the consumer space. And this is going to migrate back up into the institutional space, turning on its head the paradigm of the industrial economy where NASA built things and they trickled down through big companies and 30 years later got to the consumer. Now it's happening with the consumer and it's going up. eToro is, this is the future of online trading. It's social. They just launched this at a conference called Finovate about a month, maybe only a couple of weeks ago. You can follow traders. It's a very social experience. It's completely transparent. The feed, it's a live feed like a Twitter stream that's linked to your account. And everyone can see the trades you do. And better, you can follow the good traders. And they help surface who those good traders are. And you can see some of the returns are absolutely phenomenal. And these are consistent over time. There's some that go up and down. But some of these traders are making these kind of returns over months. And you can see the number of followers. These people have hundreds or thousands of followers, and they're making money. And eToro actually pays per follower the traders that make these trades. So the best traders on eToro now make a very good living, and with all the bonus cuts in the city, they make a better living doing that than working for a big bank in the City of London. StockTwits. Simple idea, democratizing information flow in financial services. If you've worked in financial services and you ever used a Bloomberg terminal, Bloomberg terminals are the most expensive instant messaging systems in the world, with some nice analytics on the side. StockTwits democratizes that. And that does two things. It allows people that can't afford a Bloomberg terminal to get involved, but it also surfaces a wider audience of smart people. Estimize does the same thing. Estimize is crowdsourcing earnings predictions. Right now, there's a lot of services that aggregate all the earnings estimates and say this is the consensus estimate for Nestle. But it's limited to 40, 60, 100 banks, but it's limited to those analysts. Any of you that read blogs knows that there's a lot of crazy people out there too, but there's a lot of very smart people. Estimize allows those people to surface their opinions, it tracks them, and then the best rise to the top. And funny enough, the best-ranked investment bank analysts on Estimize for most companies don't even break into the top 20 in terms of accuracy or insight. Trephis, visualization. This is sort of open sourcing financial models. Anyone that's ever built a financial model knows it's very, very painful. It's a little bit reinventing the wheel, huge spreadsheets. They've built an infrastructure to do that so that you can start immediately playing around with assumptions and not reinventing the wheel each time. Risk management. Not as much going on in this space, so if you're interested, we'd love to talk to you if you're interested in building a startup in the insurance space or risk management space. But there's one company I'm going to talk about briefly, Climate Corporation, founded 5 years ago by 2 Google engineers that didn't know how it was supposed to be done. So they built a machine that prices exotic weather derivatives. Again, this is something, and at that time, I was still working at the bank. This cost tens of millions of dollars, hundreds of millions of dollars to build and run in investment banks and reinsurance companies. They did it for a few $1,000,000 using AWS. We're talking petabytes of data, hugely computationally intensive, very, very, these are climate models, and allows them to offer risk management products to farmers that are bespoke down to the acre or square mile, based on the soil, based on the crop they're growing and the weather of that region. Just something that was impossible to do 10 years ago. They've blown past the existing risk management capacities of the traditional financial services industry. Wealth management, a lot going on here. I want to talk about Betterment. Again, this really, we're an investor in Betterment. It typifies the Apple of finance. One of the most important decisions you make in investing is actually asset allocation. Even people that are finance geeks, it's their passion, have Excel spreadsheets, they don't do that very well. It's very hard to keep rebalancing your portfolio. It's very hard to know what you should put in your portfolio. Betterment is a set of tools with a great user interface that just makes it easy. What is your goal? Is it short-term? A vacation in 6 months? Is it long-term? A house in 10 years? What's your risk appetite? Few simple questions, some sliders, gives you an asset allocation, we'll keep rebalancing. You set multiple goals as well, all in one account, and interestingly enough, we took this to some of the traditional Wall Street people, and they said, oh, that's fantastic, but, in this environment of returns, the fees that you're going to have to charge to provide that service are going to eat up all your returns. Well, their fees are between 15 and 35 basis points, which is just a little bit more than the lowest cost ETF, and is miles below any kind of active fund management. And yet you're getting some of the best active fund management in the business. In business banking, I'll finish up very quickly. You've got Cabbage using algorithms and the data in the eBay marketplace to provide working capital and inventory finance to eBay merchants. We talk about the credit crunch and banks not lending anymore. It's because they don't know how to lend anymore. But people like this, it's small now, but it's going to go quickly, are using the data available to reinvent risk underwriting and provide working capital. Fee Fighters, this is a comparison website for merchant accounts. If you never run a business and you don't need a merchant account, it might sound arcane, but every business needs to accept credit cards, needs a merchant account. And if you think buying car insurance is complicated, try to buy a merchant account. They simplified the whole thing. Now they're going one step further. It's plug-and-play merchant account. You don't have to worry about, they'll optimize behind, they'll pick the lowest cost, plug it into your website, or plug it into your point of sale if you've got a physical store, they'll take care of all the payments. And again, at costs that are below a traditional ugly, hard-to-use service. Payments, lots going on. Currency Cloud, David Birch talked about multiple currencies. We like to think of them as a universal currency translator. If you're a geek in Star Trek, you can translate from one currency to another. It's basically an API layer in the stack that will allow merchants and businesses to transact on each side of the transaction in any currency they want and not have to worry about processing the exchange rate. It's all done in real time, on the spot. You want sterling, he wants Swiss francs, you're done. Square, you've heard about, already has $1 billion valuation, reinventing point of sale, using hardware because it's US-based, but it's really a software solution. So you can see lots and lots going on. Leave you with this. If you look at this, I'm not going to read this out to you, but this is sort of a high-level view. We're going from an industrial paradigm to an information paradigm, and the competitive advantages are fundamentally different, and this is why the big companies are having such a hard time changing. It's not that they don't get it. Some people don't get it, but that's always the case. There's a lot of people in big banks and big financial institutions that get this, but their whole edifice is built on that old paradigm. So, this is the big picture. We're really excited. Finance is going to be reinvented. Things happen more slowly in the short term than you'd wish for. But I think if you look back in 5 years' time, it's going to be a completely new landscape. Thank you.